Good afternoon, traders, and welcome back to the Hot Stocks Outlook for March 8th, 2019. Hope y'all are having an excellent week out in the financial markets, and as always, plenty of great opportunities to cover as we got some things changing out there on the equity side of things. But we're going to start here looking at Walgreens Boots Alliance. We got those Walgreens stores, New York Times, Skechers, Kimco, and also Lockheed Martin. So Skechers and Lockheed, we've covered, over this really nice bullish run over the past couple months. So we'll go ahead and revisit those companies there. But let's start out here with Walgreens. And what we have here are daily bars. So each one of these bars here represents a full and complete trading day. And against that price data, you see that we have a few indicators. Right up against the price data, there's a black line there and also a blue line. If you look at the bottom of the chart, we've got this red and also a green configuration. And then towards the very right of the chart, we actually have a shadow candle. So we'll go ahead and explain every single piece of this. But going back to these lines right up against the price data, what we have here is this black and blue line, and the black line that you see is a regular or simple moving average. Now, that is a very common technical indicator. All it does is really look at past close prices, average them together, and plots that line moving forward. But the problem here is that it only looks at, in this case, Walgreens. It only looks at the close prices, and it's only looking at that one market in isolation. And so what we want to compare that value to is this blue line up against the chart. And this blue line is utilizing the artificial intelligence technology within VantagePoint. It's actually using neural networks to analyze how other markets are affecting and driving and influencing, in this case, the target market, Walgreens, and then generating predictive data that's then used to build into this indicator, turning a regular lagging moving average into a forward-looking predicted moving average. So for that value to be calculated, a lot of that artificial intelligence is working in the background and then plotting forward those future average prices. And whenever we get a situation where that blue value, in this case we see has dropped below the black line or that simple moving average, it suggests, look, prices are expected to start moving lower, right? If average prices over a given time are going to move lower than where they've been, you should expect the market to move down. Now, in addition to that predicted moving average, we also have these other indicators. Now, at the bottom of the screen here, you see we have this red and green configuration, and this is another indicator generated through that neural network process. And what it's doing is looking ahead 2 trading days at a time. So you can think of it as just a couple of candles, and it's letting you know about short-term strength or weakness. And in many ways, it's keeping you informed about when some high highs are likely to come in over the next couple of trading days. It sort of lets you know when volatility is likely to push up, push lower, so you can really be prepared. And lastly, you're actually given a predicted trading range. If you look on the right-hand side of the chart, every single day before it occurs, you're given a predicted high and a predicted low, so you can make those judgments of where should I be getting into the market, where should I be adding to my position, and we see how these forecasts work. And so it doesn't matter if it's, in this case, Walgreens, or if you're going short or going long or going, in Lockheed or some other stock, but what matters is you have the tools to guide you moving forward and understand that, okay, well, shorting at these predicted high levels, not a bad way to go. Shorting in general because the trend is down, and understanding that the market is likely to meander around that predicted moving average, right? It can trade above and below an average, but you want to remain short the market. That's really the big thing here. And we're seeing a lot of shifting and changing going on in the equity side of the market. So here we've got a 15% drop just in 8 trading days. A great opportunity to hedge your portfolio, buy some put options, and really hedge a lot of those longs over the past couple months that have done extremely well. Here's New York Times, a really great example of a stock doing very, very well since the beginning of the year. We have that black regular moving average, our blue predicted moving average crossing here at the beginning of the month. And what you want to do is understand that, okay, well, there may be that weakness over these couple day periods when that neural index you see drops down. But overall, a very, very strong forecast for the past couple of months saying, okay, well, the trend is up. Look to be a buyer at these predicted low levels. And you see just how many times you actually get to that level to have a great entry to add to your position or, possibly, take a short little day trade. But you see, you get these multiple entries and understand, look, if the trend is up and intraday you're at one of these levels, it's a good buying opportunity. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 entries into this market as it's just marched higher like many shares have done all throughout the markets. I mean, it's almost every sector is doing extremely well here. New York Times is up over 45% since the beginning of the year. So if you understand that, look, this is the time, we've got some scans that actually highlight these crossovers and let you know when a new opportunity is opening up. There's been some really great ones here. A lot of markets up, double-digit percentage points higher pretty easily over the past couple months. Now here's Skechers, and this is something we highlighted, I think, really about this period of time, end of February period. But it's the same thing. We have so many markets that at the beginning of the year started moving higher. You want to go ahead and get involved in those trades, but we're starting to see things shift. And if you look at the right-hand side of the chart, you'll see that, hey, that blue line is crossed below the black line, and it makes sense to certainly take those profits. If you're a longer-term trend trader, if you've been trading this market for several weeks, well, what's it telling us? It's telling us after this 46% move to the upside, hey, yesterday was a good day to take your profits and actually look to short the market. And if we go ahead and then look at these predicted low levels, well, coming in, you're making really great decisions coming in and adding to your position, buying up this market. But then you stop doing that right here and understand, hey, things have shifted, take your profits, and even look to go short on this day. And you see we hit that predicted low and things looking pretty weak out there. There's certainly some weakness opening up in shares. You see the short-term forecast and now trend to the downside there. I'll go ahead and flip back so we can get a sense here. But a nice 45% move, 2 months where you can be buying that market, have the guidance to know where to come in, and understand when things have shifted and changed. And it's really what I want to highlight here is it doesn't really matter if you have a bullish or a bearish environment. What matters is you're using this technology that's consistently going to get you understanding what type of trades make sense here. Where are the probabilities? Here's Kimco Realty, and not a huge move here, right? So sometimes markets, they run sideways. They don't move around a whole lot. You've got, pretty much in this entire $17 range here. But again, you understand going back towards the end of February here was saying, look, the trend is down, right? I mean, the worst thing you'd be doing is trying to buy a market like this, as it's just going to keep moving and possibly hitting those stop losses and causing problems for you. So what do you understand? Well, you understand that, hey, it's a great time to short the market, buy some put options, sell some calls. And certainly when the market gets to these levels here at the predicted highs, again, those are great intraday levels to set a fresh short position. And you see it only takes about a day, the next day you're trading and moving lower. So if you understand, hey, this is the time to come in and take action on the market at these levels, but then, also you can be adding to a, existing trend trade, right? Where you use your profits to re-add to that position and make the most of each of these opportunities you're getting involved with. So not a huge move here, but just really wanting to highlight that, even when the market moves, here, it's only about a 3% movement here, but there's been multiple opportunities here, right? So from these predicted highs, you've got about 1.5%. You get to these predicted lows, another 1.5% move, another 1.5% move. So you're probably making about 5-6%, even though the market's only moved down a couple of percent. So that's where you want to stay nimble, know where to add to your position and manage it effectively. And it's really all about understanding how these things are going to adapt moving forward. So as the forecast changes, it's going to let you know if your behavior or your directional bias on the market should change as well. Lastly here, Lockheed. So we'd covered this quite a bit. Again, another one of these markets that January started just marching higher. We had a couple of really great months in the market. But again, just like Skechers here, things can change. And you want to be aware and say, okay, well, now that blue line you see have crossed below the black line, you've gotten a nice 17% rally here in shares of Lockheed Martin. Certainly go ahead and take some profit and then assess that situation moving forward. If we get crossovers to the upside again, go ahead and get long. But right now we're seeing crossovers to the short side. So over this whole period here, you're buying up the market. You see, within a couple of days, your position is healthily, into profit there. But then look what happens here. Here a crossover comes and it's telling you, look, short the market, take your profits, whatever you're doing here, change that behavior. And so while we've gotten a really nice rally of 17% in the markets, well, yesterday was a good opportunity to go ahead and take some profit at the predicted high since the trend is now lower. You see some weakness over the next 48 hours constantly predicted here, getting you ahead of understanding, hey, things are shifting, take those profits, and now you've got a really great entry on the short side of the market as things start to weaken and we see more volatility coming into shares in the equity market. So just fantastic opportunities here. I mean, you've got 15% just in the last week in Walgreens, 45% moves in New York Times and Skechers here. So just unbelievable opportunity out there in the markets. but you want to stay nimble and understand how this situation has evolved and shifted so you can identify those opportunities, make the most of them when they come around, and really knock the ball out of the park. So that is it for our Hot Stocks Outlook. Again, this is March 8th, 2019. Best of luck to all the traders out there in the markets. Thanks again, and bye for now.